Boy, the defenses of Nvidia come out. Nvidia's been the big worry. The stock peaked, it's come back down. Really bad chart. Well, this morning we've got Loop coming out and saying 120 goes to 175. We have Reuters saying there's a new flagship AI chip that actually works in China, won't be prosecuted necessarily or pulled off by this administration. We got Piper Sandler raising price target and talking about material upside. So, you know, when you see material upside in Loop Capital, material upside in Piper, what you say to yourself is, man, are they ever trying to make this work? Blackwell sold out. I mean, all these things are just the kind of thing you get when you have analysts saying, we have to get this puppy up because this is the key tech name. All I come out and say is that, again, a Harris presidency is much more benign for Silicon Valley than a Trump presidency. Do you think that they really would be able to come up with a Chinese chip that Trump would approve of? You kidding me? But Gina Raimondo's been okay with a certain scaled-down Chinese chip. Commerce Secretary.
Meanwhile, you mentioned Piper and Loop City, positive catalyst.
Oh, my city, but the big time positive, like the most positive. And they are, by the way, because I've been in touch with Nvidia, this is the fireside chat. Sit down with Jensen Huang and Mark Zuckerberg at a graphics conference on the 29th. Remember, I know people laugh at me on this Zuckerberg, on this, the Luxottica lenses, but this thing sold out. And I know that a $5 billion investment means nothing because you're dealing with the mega caps. But you got to remember that this was incredible that Zuckerberg sits down with NVIDIA. When Jensen used to say, listen, he's for combat, I'm for... He used to say, he's for combat, I come in peace. I'm in love, and he's, anger, all that stuff. Well, they are together. And I think it's fantastic for both of them. But don't forget, what matters is who do you think is going to be in the White House?
And we'll talk more about the SMH.
According to experts at Fundstrat Global Advisors, Nvidia's revenue might increase tenfold from here and reach $1 trillion by the end of the decade. Nvidia's revenue is currently $100 billion, but it has the potential to reach $1 trillion by the end of the decade. Thus, Nvidia by alone has the potential to be a 10x, the analyst stated in a conversation with financial writer Natalie Brunell. In answer to a query concerning the earlier forecast that the S&P 500 would rise as high as 15,000 by 2030, the statements were made. They clarify that when the world's supply of prime-age workers runs out, pay will increasingly go to businesses that create automated solutions. By 2030, these trends could inject about $4 trillion a year into the S&P 500, according to the analysts. As a historical example, they cited the 2008 financial crisis, showing how S&P earnings overcame early analyst skepticism to rise from $60 to $280 a share in just 14 years. They anticipate similar growth is achievable owing to demographic trends and rising automation spending. They predicted that S&P will soon report earnings per share of more than $1,000. Revenues for businesses like Nvidia might skyrocket as they take advantage of AI, mirroring the larger economic trend away from human work and toward machine output. The experts stressed the significance of examining long-term trends, pointing out that previous projections frequently understated the market's capacity for expansion and recovery.
John, let's start with Nvidia. Washington's export controls have no doubt challenged the broader semiconductor sector and has resulted in fewer sales to China. CEO of Nvidia, Jensen Huang, recently saying, quote, our business in China has substantially lower than the levels of the past, and it's a lot more competitive in China now because of the limitations on our technology. The company, though, seems to be trying to change that, and according to Reuters, working on a new AI chip that complies with the current export controls. The question for Wall Street is whether this will help improve its growth prospects in the country. Cowen analysts estimate Nvidia will make less than 5% of its 2025 sales in China. Before restrictions, sales were anticipated to be around 20 to 25%. Looking at Nvidia stock today, bouncing back at $124 a share, up about 5%. Piper Sandler this morning raising its price target on the stock to $140. Analysts there expecting a strong earnings report when the company reports in late August. This as Wall Street awaits earnings from NXP Semiconductor. That stock also higher today. It feeds into the automotive market. And investors will look for a read through the electrical vehicle sector and whether demand is starting to improve in the back half of this year. Kelly.
Indeed. Seema, thank you very much.
Let's dive right in. Greetings to all, and welcome back to Investing Tutorial. Nvidia has approved the first-ever usage of Samsung Electronics' fourth-generation high-bandwidth memory, or HBM3 chips, in its CPUs, according to 3 persons briefed on the situation. However, the approval is a little muted because, according to the people, Samsung's HBM3 chips will only be utilized in the H20, a less advanced Nvidia graphics processing unit, GPU, that was created for the Chinese market in accordance with U.S. export regulations. They also mentioned that it was unclear at the time if Nvidia will include Samsung's HBM3 chips into its other AI processors, or if those chips would need to pass further testing. These insiders, who wished to remain anonymous because they were not authorized to speak to the media, said that Samsung has also failed to match Nvidia's specifications for 5th-generation HBM3E chips, and that testing of those chips is still ongoing. Chips are vertically stacked in HBM, a form of dynamic random access memory, DRAM, that was initially manufactured in 2013 in order to conserve space and lower power usage. It is a crucial part of GPUs for AI and aids in processing vast volumes of data generated by intricate applications. The generative AI boom has produced a skyrocketing demand for advanced GPUs, which Nvidia and other makers of AI chipsets are finding difficult to meet. This is why Nvidia approved Samsung's HBM3 chips. Since there are only 3 major producers of HBM, SK Hynix, Micron, and Samsung, and because HBM3 is likewise in short supply, Nvidia is eager for Samsung to meet its requirements so that it may expand its network of suppliers. According to 2 of the individuals, SK Hynix, the industry leader, intends to produce more HBM3E and less HBM3, which will boost Nvidia's requirement for more access to HBM3. According to Reuters in May, which cited sources, Samsung, the largest memory chip manufacturer in the world, has been trying since last year to pass Nvidia's testing for both HBM3 and HBM3E, but has had difficulty because of problems with heat and power consumption. Following the May release of the Reuters piece, Samsung denied any allegations that it had failed Nvidia's tests because of issues with heat and power consumption. 2 of the sources claimed that Samsung might start providing HBM3 for Nvidia's H20 CPU as early as August. Nvidia designed 3 GPUs specifically for the Chinese market, the H20 being the most sophisticated. The U.S. increased export limits in 2023, hoping to obstruct advancements in AI and supercomputing that would be advantageous to China's military. The H20's processing capability has been severely limited in compliance with U.S. sanctions, in contrast to the H100 model that is marketed in non-China markets. When deliveries of the H20 started this year, the American company priced it lower than a competing chip from the Chinese tech giant Huawei, which led to a rough beginning for the device, as Reuters noted in May. But according to other sources, sales are currently rising quickly. SK Hynix, as opposed to Samsung, is Nvidia's primary source of HBM chips and has been providing HBM3 since June 2022. Additionally, it started supplying HBM3E to an unnamed customer in late March. Sources claim that shipments ended up at Nvidia. Micron has also stated that it will provide HBM3E to Nvidia. With all of these considerations, Nvidia is unquestionably a great buy, especially if you're looking to invest for the long term because the company hasn't reached its full potential yet. What do you think about Nvidia stock? Is it a good buy at the current price? Please share your opinions with us in the comments section, and don't forget to let us know what you think NVDA is worth. If you're interested in learning what other companies like Nvidia have been up to lately, click on the next video on your screen. We'll see you there. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on ad-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks. Enjoy a limited time 8.1% APY on idle cash for 3 months and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Moomoo for sponsoring this portion of the video.
June. Nvidia was one of the stocks leading the index higher. Now it is ticking lower, down just nearly 0.2%. Our next guest says, though, that the hype around names like Nvidia could push the S&P to even bigger highs in the next year. Joining us now is Neil Shearing, Capital Economics Group Chief Economist. Neil, it's great to have you. Thanks so much for joining us here. So I know you recently changed your call on where you see the S&P heading. Talk to me about what that call change was and what inspired that change.
Yeah, well, the roots of our call on the S&P go back several quarters, actually. We did a large piece of work at Capital Economics looking at the effects, both economic and market, of the AI revolution. The conclusion of that was that we thought it would have a positive impact on economic growth. But normally what happens during these big breakthrough technologies is that markets try to capture the benefits of that growth ahead of them actually crystallizing in the real economy. So you tend to get hype, you tend to get bubbles forming. We obviously had that in the dot-com boom. And our sense is that the same thing is playing out with AI. And so there's a debate about whether or not we're in an AI bubble. How far does that have to inflate? If you look at history, it has a lot further to inflate. Hence our view that the S&P 500 is going all the way to 7,000 potentially by the end of next year.